growth of HELOCs, home equity lines of credit. So what is a home equity line of credit? So a home equity line of credit is you have your mortgage, right? But oftentimes what happens is we have appreciation in our houses. So over the last year, 2 years, we've seen crazy amounts of growth on the equity in our specific houses. So I just created a video on this not too long ago where nobody's wanting to touch those pandemic interest rates, right? A lot of people with the last 2 years have interest rates in the 2s and low 3s, some even high 3s, and they have a lot of equity in their house. And instead of refinancing, what a viable option is to obtain a home equity line of credit. So let's say the house that they have right now is worth $500,000 and they purchased it for $400,000. And they put a decent down payment and they only owe on that property $300,000. So there is a gap from that $300,000 all the way to the $500,000. So what a home equity line of credit allows you to do, it allows you to tap into that $200,000 worth of equity. Some banks allow you to go 100% loan to value. Some of them will go 95, 90, and so forth. Depending on the amount that you are allowed to be loaned on, essentially is the way it works is they say, okay, we will lend you 100% equity, 100% loan to value on this property. So you have $200,000 to play with on this specific mortgage. So you have your first mortgage payment, and then behind that, you will have your home equity line of credit payment. So it's essentially like a credit card. You only get charged for what you use. And the cool thing about this is that you can pay it off and then use it all over again, pay it off, use it all over again. Just depends on how much you use and how much equity you want to tap into, of course. And your monthly payment is calculated by the amount of essentially debt that you are taking out. But the cool thing and why these are becoming so popular is because nobody wants to touch their pandemic interest rates. I say that just because that's what's stuck in my head, but nobody wants to touch these incredibly low interest rates that they have from 2 years ago, 1 year ago. So what they're doing now is they are tapping into the equity that they have, whether that's to buy another investment property or whether it's to pay for college tuition, pay off debt, whatever the case is, they're now able to tap into the home's equity without touching their first mortgage. They now have this essentially a credit card or a bank account that will have up to $200,000 in this specific case. Now, I want to read something that's very interesting here. It says nearly $69 billion in HELOC credit limits and $27 billion in closed-end home equity loans were originated over the first 5 months of 2021. That compares with $101 billion in HELOC volume and $38 billion in closed-end home equity originations over the same period this year, according to a new report by the Urban Institute of Housing Finance Policy Center. A lot of people are taking advantage of this because once they pay it off, they still have their incredibly low interest rates, and they can, use this as an investment to buy other investments and have that money working for you while you're still locked into your super low interest rate. Here's another quote that I found very interesting. Homeowners are showing increased willingness to use home equity lines of credit and home equity loans to tap into equity, the Housing Finance Policy Center also reported. If you purchased a house in 21, 20, even the beginning of 2022, you might have the ability to obtain a home equity line of credit or an equity loan. Just it depends on your specific situation and where you're at in the equity that you have in your property, right? If you are in a good position to obtain a HELOC, you still go through the same traditional type of financing. You still have to provide, I know this because I have a HELOC on my property. You still have to provide income documentation, bank statements. You still have to provide the general loan information, but it's a lot quicker of a process. I think ours took us 4 days or 5 days to get approved for your home equity line of credit. So if you have equity and you want to invest and you are thinking about tapping into your equity in your property, but you don't want to touch those interest rates, a HELOC is a very, very good option for you if it makes sense, of course. Guys, thank you so much for tuning in. I hope I was able to answer some questions in regards to a home equity line of credit. If you have any questions in regards to this podcast or any podcast, make sure to send us a DM or leave a comment down below. As always, we appreciate you for tuning in.